Slide 25 summarizes the group's results for the financial year to 30 June 2019. Notable is the increased turnover from continued operations to $217 million from $146 million in the prior year, as gold production increased by 54% to 172,000 ounces, and the rand price of gold increased by 7% to 578,000 rand per kilogram. That's the average for the last year. Although the gold price of gold declined by 3% during the 2019 year, the rand-dollar exchange rate also depreciated by 10%, resulting in a net 7% increase in the average rand price of gold for the 2019 financial year, which assisted in offsetting inflation-linked costs. Elikhulu's lower cost of production for the 10 months, post-commissioning on 30 August last year, and the generally improved performance from Barberton contributed to the group's all-in sustaining costs declining by 28% to $987 an ounce, or 451,000 rand a kilogram, representing a 20% decline in all-in sustaining costs relative to the 2018 financial year. Commensurately, EBITDA increased by 75% to $57 million, and attributable earnings increased to $38 million relative to the loss of $123 million in the prior financial year, after recognizing a loss from discontinued operations of $138 million due to the cessation of deep-level underground mining at Evander's 8 Shaft. The materially improved turnover and reduced costs contributed to basic earnings per share increasing by 129% and headline earnings per share increasing by 20%. Headline earnings per share excludes the impact of the impairment of the 2018 financial year and its partial reversal in the 2019 financial year following the decision to mine the 8 Shaft pillar, and in so doing use some of the infrastructure impaired in the prior financial year. Although there were no new shares issued in the 2019 financial year, the number of shares taken into account for earnings per share purposes increased relative to the prior year, as the full effect of the 130 million shares issued on 30 May 2018 were taken into account for calculating earnings per share and headline earnings per share in the current year. Pan African still holds 306 million treasury shares. That reduces the total issued shares, number of shares, of 2.2 billion to 1.9 billion, which were taken into account for purposes of calculating the 2019 earnings per share and headline earnings per share. At year-end, our senior debt peaked at 219 million and should now aggressively amortize, as I'll illustrate in a subsequent slide. The decline of 58% in capital expenditure is largely attributable to expansionary capital declining following Elikhulu's commissioning. The other growth initiatives that Kobus referred to in the presentation have their own capital requirements, but these are largely, with the exception of Egoli, funded from internally generated cash flows.